Since its all-time high of $1,209 per share last year, followed by its sharp decline, analysts have been predicting a bounce back to its previous state, and the latest analyst to do so is longtime Tesla bear Ron Barron. Barron believes that Tesla is unstoppable and will bounce back at a certain level. Why does he believe so? At what level will this stock bounce back? Let's find out. Tesla stock has gone down 18% year-to-date, lagging behind the broader S&P 500, which has dropped around 9% in the same time frame. The underperformance follows a fantastic 2021, in which Tesla's minus 0.1 shares rose by about 50%. As investors prepare for higher monetary policy and higher interest rates this year, the recent sell-off has been fueled by a broader sell-off in high-growth, high-multiple equities. Ron Barron is no stranger to Tesla and Tesla investors. Barron projected in 2016 that Tesla Incorporated would become one of the world's most valuable firms. With a 1% investment in the company, his firm Barron Capital Management was one of the electric automaker's top investors at the time. Barron Capital is one of the company's greatest long-term stockholders. According to TSLA, the investment group has approximately 6 million Tesla shares. Fortunately for Barron, the cost of ownership for those shares is only $42.88. The investment paid off with a $4 billion profit, but Barron said it was just the beginning, with the potential to triple that in the next 10 years. Barron stated that his investment firm was more concerned with Tesla's business model than the stock's short-term yo-yo swings. He stated, "When we invest in a company, we aren't concerned with the stock prices, we're concerned about the business." He also said, "In the short term, I can't predict what will happen. I believe that it now has a market capitalization of about $400 billion. When we first started, it was worth $40 billion. In 2020, Barron again claimed Tesla stock prices would rise once more. Barron went on to say that he'd stated for a long time that Tesla's market worth would reach $1 trillion to $2 trillion. Given recent events, he remarked, "I believe $2 trillion is the proper number." 2021 proved him right, and Tesla made history by hitting the $1 trillion market capitalization mark. Now, Barron says over the next 10 years, Tesla might return 300% to investors, predicting that the electric vehicle company would develop more facilities and sell $500 to $800 million worth of cars. So far, his predictions have been spot on. Will they come true once more? Barron reveals why he invested in Elon Musk's electric car firm in the first place. He explained, "I thought the opportunity with Tesla was to convert the cars we make in the United States from gasoline to electric, and that had never been done before. You had to be a fantastic engineer, a great leader, and have a good understanding of technology for this to happen. Then there were the entrenched interests to contend with, such as car dealers, automobile firms, and oil companies. I was betting on Musk, and the majority of people were betting against him," Barron explains. He stated that the root of his belief in Tesla stems not only from the business, but its approach to innovation. "They're innovating at light speed," Barron explained. "They're doing the same thing with the autos. They're even doing it with space." And he's quite right. What is Tesla's unique selling point? What is the driving force that has made Tesla a success and made even the worst skeptics admit the prowess of the company? Innovation. That's what Barron believes makes Tesla unstoppable. Tesla is famous for creating world-class innovations that are redefining the automotive industry by releasing cutting-edge features and technology breakthroughs at a breakneck pace. Tesla has pursued a program of constant innovation from the beginning. It has energized competition, fueled innovation, and popularized electric vehicles in the automobile sector. It's no secret that partnerships with major competitors such as Toyota and Mercedes-Benz have also aided in the growth of the electric vehicle sector. Tesla's solar energy breakthroughs have hastened the adoption of renewables while also putting another nail in the coffin of fossil fuel companies. Tesla's acquisition of SolarCity last year showed their understanding of the need for battery technology advancement. They entered the energy business back in 2016 with the acquisition of SolarCity as part of a commitment to developing renewable battery technology. Tesla has changed the way we think about energy storage since then. The firm has constantly fostered technical growth that does not have a harmful impact on the environment in all of its projects and relationships, leading to a favorable company image and therefore driving its value up. As the company continues to expand and come up with new innovations, there's no doubt that it will become even more relevant as it surpasses its current level. Tesla is currently working at an accelerated rate to reach its goals, and the company has prioritized the expansion of its factories as the production and delivery of electric vehicles is directly proportional to its profit margins. After a very long delay, Tesla has finally gotten the go-ahead on their Berlin factory, which is great news for investors. The Tesla Gigafactory Berlin has received final environmental permission from Germany, following a lengthy process that included delays, protests, and other drama. The state of Brandenburg produced an official document verifying the update and outlining the next steps for the electric car company to begin vehicle production in its German-based electric vehicle factory. As to the state's new statement, the clearance for Giga Berlin encompasses many activities, such as the manufacturing of up to 500,000 vehicles per year. The permission also includes battery cell production activities within the Giga Berlin complex, which should allow Tesla to manufacture its in-house cells from within Germany. What is the implication of this, and how will it affect Tesla's bounce back to higher levels? The Gigafactory is critical to Elon Musk's plans to dethrone Volkswagen as the European market leader, with a 25% share of European electric vehicle sales to Tesla's 13%. Germany's top manufacturer has the upper hand in Europe, but perhaps not for long if Musk's plan goes as expected. The facility, which Tesla has started building under pre-approval licenses, will also contain a battery plant capable of generating more than 50 gigawatt-hours per year, far beyond European competitors. Musk stated that while batteries for on-site cars will initially come from China, he hopes to reach volume production at the German battery plant by the end of next year. The company intends to produce 500,000 battery-powered vehicles per year, and according to media estimates, the business plans to invest up to 4 billion euros in the project. To put these figures into context, consider the following. According to the firm, the Wolfsburg Volkswagen factory, which is the company's headquarters and the world's largest single automobile production complex with a surface area of 6.5 square kilometers, produced slightly over 700,000 cars in 2018. In 2022, all German automakers combined will produce 428,000 electric vehicles in the country, fully battery electric and plug-in hybrids combined, with 62% of them being exported. All this will no doubt result in a more forward shift to electric cars, with Tesla being at the forefront. Meanwhile, Tesla's stock prices keep climbing back up, just as Barron predicted. We believe this is due to the bullish catalysts such as the Berlin Gigafactory, exciting new battery technology, surge in oil prices, and overall renewed faith in the company. If there's one thing Tesla investors have come to expect from the firm, it's that it gets better with each passing quarter. Tesla's momentum continues to build into 2022, a year in which the car maker will focus solely on scaling up 2 new sites and delivering its new 4680 battery technology and structural battery pack after performing so well at the end of 2021. According to some reports, deliveries of Tesla's mass-market Model 3 and Model Y automobiles are increasing. However, will the stock continue to climb back to the price of its glory days or even outperform last year's prices by 300% as Barron claims? In the interview, Barron stated, "We invest in firms that are investing in themselves." There's no doubt that this is exactly Tesla's mode of operation. He pointed out that Tesla has utilized its revenues to create many facilities across the world, increase its vehicle lineup, and launch new enterprises. Many analysts predict that at this trajectory, the only way is up for Tesla. With more factories comes more production. With more products, more profit, which means more money for investors overall. Let's not forget the innovation factor. We believe that's what makes Tesla unstoppable and wholeheartedly agree with Barron. Because of its innovative and agile nature, Tesla will always be one step ahead, securing a larger portion of the market than its competitors, which have a long way to catch up, especially looking at the statistics. In the United States, Tesla is the market leader in electric vehicle car sales, while China and the United States are 2 of Tesla's most important markets. In 2021, Tesla delivered 936,000 automobiles worldwide. With the opening of its new factories, that number is set to increase by no small measure, so we believe Barron has a good point. An incredible bounce back is definitely in store for Tesla. Do you agree with Barron? Is Tesla unstoppable? Will Tesla investors see a 300% return in a few years? Comment down below.